Welcome back. The Bajaj twins are now fighting for the bulls. Bajaj Finserv and Bajaj Finance have both rallied 3.5% and 3% respectively. Bajaj Finance is ticking higher as we speak. Remember, Bajaj Finance has had quite a muted year. Year to date, its revenues are down 4%, making it the lowest return for Bajaj Finance in the last 10 years. It's been a solid compounding story, solid wealth generator, but this year, things have gone south for the company, and year-to-date, Bajaj Finance is down 4%. But again, on the last trading day of 2022, it's trying to put in a bit of a fight. Sampath Reddy, the Chief Investment Officer at Bajaj Allianz Life Insurance, now joins in to talk all things market and outlook 2023. Sampath, morning, and thanks so much for joining in. 7 consecutive years of gain, and this year we've clocked in a very solid outperformance vis-a-vis the global markets. Does that set us up for, on the negative side as we enter 2023? Because it's hard to have 8 consecutive years of good returns.
Yeah, I think, overall markets have done very well in the last couple of years, last 3-4 years, as you mentioned, in fact, even in a longer period of time. India has been one of the best performing markets globally. And, thanks to our very strong macro standpoint, while most of the other countries in the developed world are reeling under very high inflationary pressures and hence interest rates are moving up, India stands out, one of the standards very well in that backdrop. And also in terms of our GDP growth rate, why still we are one of the best growth that we are seeing vis-a-vis most of the the emerging markets as well as even the developed world. So because of that, we continue to think that India will be one of the best place to invest from the long-term perspective for the equities, and outperformance vis-a-vis most of the other global emerging markets will continue, even though that our valuations today vis-a-vis most of the other emerging markets are slightly on the higher side, but our corporate earnings growth have been very, very strong and robust. Just if you see the last 3 years earnings growth as such, Nifty 50 companies on an aggregate in FY20 they made a profit of 3.2 trillion rupees. And FY23, most likely, all of the Nifty 50 companies that together are likely to make 6.8 trillion. This is more than doubling in terms of earnings. So because of strong profit growth and very good macro environment, I think India's outperformance will continue. However, the valuations are on the higher side. In last 1 year returns, let's say 2022 returns, just equal Nifty is probably will be ending up with a return of just about 5%. I think this is slightly subdued. We believe that somewhat subdued returns will be there for the next couple of months, or maybe even up to 6 months. If you see, the overall interest rates are moving up a lot in the last 1 year. And even though we have come to the end of the rate hiking cycle, but the elevated levels of interest rate will remain for for the next 6 months. It looks like. Because of that, I think the market returns will be subdued for some more period of time, and probably toward the end of that, toward the second half of the 2023, we could see again a resuming of the bull market in the Indian equities.
In terms of individual sectors, Sampath, what are you looking at? What's the shining star of 2023 going to be? I know it's very hard to do this crystal ball gazing right now, but if you had to put your finger on it, where do your preferences lie?
The banking has done very well in the 2022, and if you look at the current standpoint, the balance sheets of the banking sector is very, very strong. The lenders' balance sheet is very, very strong. Most of the financial companies have got a very solid capital adequacy ratios, and the credit growth is now picking up, and the asset quality has come back to the pretty much, I would say, one of the the peak levels. So overall, the banking sector stands very well for the next year. And pharmaceuticals has been an underperformer for the last calendar year. I think the valuations have corrected in this sector quite meaningfully. And the 2023 could pharma could really it could do well. IT as a sector has done well in the last few years. Maybe 2022 given up some of the gains, but in terms of valuations, even IT sector looks quite good. But largely the kind of expectation which are there in the developed market in terms of let's say recessionary pressures. I would focus more on the domestic consumption oriented companies for the next calendar year.
Okay, got that. Sampath, good morning and thanks for joining us. You know, we have seen a lot of these smaller themes also pick up, right, this year, whether it's renewable energy, whether it's the EV space, even something like a defense has seen, you know, huge gains. Are there any of these pockets where you find value as well?
Yeah, I think, you know, the EV sector is still emerging. You know, they're just getting into the critical mass in terms of, you know, the news, in terms of vehicle sales. Two-wheeler is achieving, I think, you know, come to almost like about, 78% kind of, sales, or, you know, the two-wheelers are coming from the EV side. I think that's a good sign. And this sector, I think, EV segment will, I think, you know, will do very well over the period of, you know, the next, not just the 2023, but even, you know, beyond. So this sector, I think, could be one of the best performing opportunities subsegments.
When you say we should expect subdued returns in 2023, what is it that you expect? Because even this year, in 2022, markets are only up 5%, less than what a fixed deposit would have given you. And it's not tracking the earnings growth that we've seen this year. So to say that next year we will at least grow as much as the earnings growth, because that's what we typically follow, that's not happened this year.
So, right, actually, you know, that's what, you know, I mean, with the interest rates moving up, you know, what happens is that, you know, the equity valuation tend to get, you know, derated. If you see the, you know, the bond market, for instance, whenever the interest rate goes up, the bond prices will come down. Similarly, you know, equity prices are also a function of, you know, present value of, you know, the future cash flows, you know, of course, over a longer period of time. So, you know, given that interest rates moved up, the valuations got derated. And as we believe that interest rate hiking cycle is coming to the end of, we have come to the end of interest rate hiking cycle, but you know, the rates are not going to come down very soon. Probably they will be there at the elevated level for some more time, you know, before the rates coming down. You know, I think, you know, that's why, you know, for the next, you know, probably 3 to 4 months or even 6 months, you know, market returns will be somewhat subdued because the interest rate will still be elevated level during this period. And, you know, towards the second half of 2023, we believe that rates will begin to soften. I think that's when the, you know, the PE multiples again begin to normalize and even probably expand. So that's why I think, you know, the near-term returns will be somewhat subdued, but the full year 2023 could be a good year. And if you see the whole of 2022, you know, we got a very good support from the domestic flows from the equity market perspective, you know, because interest rates were very, very low levels. For 2023 now, you know, most of the banking sector is offering, you know, fixed deposits of even above 7%. You know, we could see some amount of a competition for the, from the FDs and the other fixed income instruments, you know, from the domestic equity market flows point of view. So because of that, I think, you know, in the first half markets, you know, some more time of subdued return, maybe 3, 4 months or 6 months could be there. But, you know, second half of the 2023, we could see the, you know, stronger recovery in the, you know, bull market.
All right, we will leave it at that. Have a great new year. Thanks a lot for joining in to the conversation. Let's slip into a quick break. On the other side, we have the management of Skipper to discuss a new order that they've won worth 2570 crores. More on that coming up in a bit.